in London with Tom McKenzie.
And here are your top stories. S&P futures extend losses and the dollar firms after an upbeat ISM services print raises prospects of a Fed hike.
Have you with us. So we've gone from at the beginning of the week talking about, well, the Fed's likely to pause, and so that's why we're seeing risk appetite, to, well, the Fed maybe is likely to hike, and the data yesterday seemed to be one of the driving forces there. The dollar continuing to strengthen through that conversation. What do we make of this recent dollar strength?
Absolutely, Anna. And if you look at the data, it's pointing to that still robustness in the U.S. economy. And of course, you still have those price pressures. That ISM report showed you that we still have those price pressures in the services industry. It was also modest in manufacturing, Tom, as well. But the problem remains that the Fed is worried about cutting rates or moving across too soon. And so I think the story here is, how much do we keep rates higher, and for how long will they continue to stay high until we rein in on those inflationary pressures?
And it seems to be a more divergent picture for these central banks. Really interesting to hear from Andrew Bailey and members that are coming through from the Fed. How are you thinking about the divergence across central banks and whether or not a consensus is forming now?
That's an excellent question, Tom. And you can see that through the dollar strength, right? And if we're now in an environment where we're thinking the Fed is going to continue on tightening, or at least keeping those rates much higher, whereas peak rates have stayed, have really we've met the peak rates for both the UK and the ECB, then the question is just how high can the dollar go?
OJ ends up doing? Is it about the European growth story? So many different dynamics to focus on. Let me go to the Bank of England conversation then in a little bit more detail. We saw that weakness in the pound just yesterday. Are we done then? I mean, we've been wrong-footed by some of the comments from certain members of the MPC previously.
Yes, absolutely. And you'll see that it's been leaning a bit more dovish, right? We're getting more dovish commentary relative to the Fed and even ECB members who are relatively more hawkish. And I think the concern here, for me at least, in terms of the UK here, is, are we going to stop raising rates too soon? I think potentially we're going to, the expectation had been that the UK would continue on raising rates and keeping that, the base rate much higher relative to the ECB.
I still don't understand what's changed the calculus for the BOE. The services data is better than some of our counterparts in Europe. The ONS data has...
That potentially could explain why. It's the housing data. The housing market in the UK is struggling. And we had a report come out of Bloomberg Economics just earlier this week that points that continued weakness in the housing market, reaching levels we haven't seen in quite some time. And that's putting pressure here on the consumer at a level that the Bank of England has to step in here to avert a housing crisis.
And a lot of interesting conversation around the lags in the economy with housing in mind. Yesterday with Andrew Bailey talking about the lags between policy action and impact on the economy, and the fact that those lags seem to be lengthening in their view. That then leans towards maybe a pause before you see some of the signs of the tightening in the economy. But again, it goes to that whole data dependence narrative, which we get from so many central banks. If you wait for certain bits of data, then you might be too late.
Yeah, absolutely. And look, we have a maker survey coming out of the BOE today, and it's going to shed some light into what the economy is doing, what the expectations are when it comes to inflation. And that's going to inform us of whether or not we're going to see the Bank of England potentially step up. We've seen the Polish central bank surprisingly cut rates yesterday by higher than expected. Is this the beginning of the tide turning for central banks globally? And does it start with Poland?
Really interesting. Or is it all about politics and an election in Poland? But it's fascinating to point out the real estate sector, or at least the housing sector in the